Hey, Steve Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you get any value, entertainment out of these videos, I'll ask that you hit thumbs up and subscribe. Questions, comments, put those below. Back in the saddle this week, obviously an extremely volatile market. This past week, stock market in the U.S., Dow, S&P down about 12%. The fourth worst performing week in the U.S. stock market dating back to World War II. So I'm certainly not going to pretend to be a stock market expert here, nor am I going to pretend to be a coronavirus expert, but I think it's important to have a discussion and dialogue here today and maybe discuss how these may or may not pertain domestically to the Canadian and Vancouver real estate markets. But yeah, I think obviously full capitulation in the stock market, obviously reacting to the coronavirus. But I think it's important to understand, because I get a lot of interesting conversations this week, talking to money managers and people in that space. And a lot of the conversation is, well, it's just like the flu. It's hardly anyone really dying. And I think it's important to distinguish as like, I am certainly not the coronavirus expert, but if it's just the flu, if it really is just the flu, why are we quarantining 700? Why is China quarantining 790 million people or whatever, basically half the population? Now remember, 790 million people are under some sort of travel ban or quarantine in China. There's 36 million people, 37 million people in all of Canada. So these guys have quarantined an insane amount of people. You have Japan, which is shutting down schools. You have Italy banning people from going to soccer games in their largest soccer league over in Italy. So what do these countries, what do these governments know that we don't know? If it really is just a flu, why would you go to the extreme lengths of basically shutting down schools and shutting down, basically a huge chunks of your economy? So clearly, I think that some of the numbers and the figures that are getting released, I don't think anybody really has a true understanding or a true grasp on the scenario, and they are taking extreme measures that we probably don't really have a full awareness and understanding of. I think that the government is obviously trying to keep some of the information probably somewhat suppressed from the general public, and probably for good reason when you think about it. But this obviously begs the question, is how is this going to play out? I think that, financial markets in general are a massive component of the economy, because financial markets are almost basically what's moving the economy. If you look at it particularly for businesses, this has real life implications, real life ramifications for the broader economy. For example, when you have cities basically shut down, people not going to, say, soccer games in Italy, that's somebody losing a revenue. That's a company that maybe says, maybe we shouldn't hire another concession stand worker this month because, hey, we can't even get people into these games. I'll give you a real life world example. I have family in the airline industry. Dad is a pilot, and they have typically every day, on average, he flies to Asia. They have 3 planes routing, LA to Hong Kong. Right now, they're down to 1 flight a day. So they've just grounded 2 full massive jets on the ground. That has real life ramifications. So if you're this airline company or industry, you're probably saying, maybe this month we don't hire another pilot. Maybe this month we don't hire another flight attendant. This has real life, again, ramifications. And so I'm kind of curious to see how this progresses. And you can talk about companies again, like when you have Apple shutting down production lines, like that's somebody's income that's taking a hit there. That's a business that's having a revenue impact, and that is basically what drives the economy. And now, again, for example, if you're that airline pilot, and you're now on unpaid leave because there's 1/3 of less of the airplanes flying out, maybe you don't go out for dinner and have a beer tonight. Maybe you curtail that spending. So that all is cumulative, and this is how real world economies function. Is over 65% of the economy is consumer consumption. So if people aren't going out, we can see it here domestically. People writing news articles in the Vancouver newspapers, locally, saying all these Chinese restaurants are being impacted. People aren't going out for dinner. Well, that how is that surprising? I would say that you could certainly make that argument that that's an overreaction of the market. Like, you should probably still go for Chinese food. It's not going to kill you. But it's the sentiment, it's the narrative that's being told, is that you can't necessarily control the way that people are going to behave and react to news. So maybe it is blown out of proportion, but at the end of the day, this is what the market is doing. This is how the market is reacting. So I'm going to be watching this very, very closely. I think that we're going to see, we saw the percentage odds that the Federal Reserve will cut rates in March is now 100%. So the market now is pricing in a Fed rate cut in March. There's also discussions that they might do an intermittent cut, intermeeting cut. The Fed is expected to meet on March the 18th. They may actually go ahead of that time and cut interest rates. The Bank of Canada has their next meeting March the 4th. And maybe the BOC brings in a rate cut. How does that help the markets? We'll obviously wait and see. I mean, my thought process is you have a global pandemic. I mean, you can argue if that's the right word to use. You have a global pandemic or a flu that is circulating around. I'm not sure how making credit cheaper is going to solve that problem. I don't think by the Fed or the BOC cutting interest rates is going to make this flu go away, and is going to make people start to go out to restaurants and go buy computers and laptops and go to sporting events, particularly if those sporting events are shut down. So I think I don't see how cheaper money is going to solve this problem. And this is truly a black swan event. But make no mistake, the economy was already slowing heading in to this coronavirus impact. One example, you can talk about China, wait to see the numbers come out. I mean, China, the GDP for 2019 in China, pre-coronavirus, for all of 2019, was the lowest it's been in over 20 years. And it probably would have been worse, but that's all the amount of data that they have. So the economy was already slowing. You already had financial markets at, tip-top pricing. And then you throw on not only a slowing economy, but then you throw on a black swan event on top of that. And it's going to be interesting to see how this shapes up. Now, domestically, I think you have to wait and see. I can tell you right now that, at least in the real estate market, which is very, very slow moving, it has not reacted. The market still here is ripping hot. Seeing new highs set for the condo market. I'm just seeing, really honestly, some ridiculous sales prices, over $1,300 a square foot for one bedroom with no view in Olympic Village. 10 offers on a detached house in East Vancouver. That seems to be what is happening. What we can see of this coronavirus is that the bond yields are just plunging. And so you have your 5-year Canada bond plunging to almost about a 3-year low right now. So you're going to see 5-year fixed mortgage rates are going to come down probably another 10 basis points next week. So that can provide a temporary boost to the markets in the form of lower interest rates or lower borrowing for people to basically leverage that up and take on more debt as the market heats up. But I'm kind of curious to see how that gets counteracted by market sentiment. Does this impact of the stock market start to impact psychology? Does this eventually start to filter through into the real economy, and people start, hours worked starts to get cut, or people start to get laid off because businesses have to pull back? Does that become a real thing? And if that does, and that starts to filter through into the housing market, that is a substantial headwind. And as I've said before, this market, if you get a substantial correction in, say, Vancouver or Toronto real estate, that's not going to come through higher interest rates. Those aren't coming anytime soon. Those are going to come through a increase in unemployment. That's going to come through a slowdown in the business cycle. And so we had the economy slowing. You can go look at Q4 GDP for Canada just came in, 1.6%, not great. Economy slowing, and then you throw on, again, black swan event. So again, watching that very, very closely. But yeah, I think real life stories, I can give you guys a real life story. I had clients this past week looking to buy a detached house, and we were talking about it. We said, hey, like this, what's happening in the stock market? Yeah, we're really kind of watching this. And he says, yeah, this is actually impacting me. And he's like, we want you to explain this to the seller that, listen, like, yeah, you should take a lower price right now, because my down payment as the buyer is coming from me having to liquidate some of my stock as a down payment. The reality is, let's say, for an example, if you're buying a detached house in Vancouver and you're dropping, $300,000, $400,000, $500,000 as a down payment, there's probably a strong likelihood that's not just sitting in cash in your bank account. There's probably a strong likelihood that you're having to liquidate some form of equity. So if you have a bunch of, U.S. equities or whatever you have in your portfolio, and you're liquidating that to fund your down payment, seeing the stock market capitulate and drop, 10, 12%, that is real life impact on someone's financials. So that's kind of what I'm watching. I think that this has been a truly fascinating to watch this past week. As much as it's painful to say, it is actually quite exciting. I think there's a lot of opportunities that brew out of these market corrections, and quite frankly, probably long overdue given this extremely long bull market. So I'm gonna be watching very, very closely over the next couple weeks. I highly encourage your comments below, what your thoughts are on not only stock market, coronavirus, real estate. Would love to hear your thoughts. There's been certainly a lot of engagement and entertainment on Twitter this past week. So anyways, that's all I got for this week. If you found that entertaining, any sort of value, please subscribe and hit thumbs up. Give me some YouTube algorithm juice. Appreciate it. See ya.